All right, folks, just a quick update. It seems like I'm on a run of like doing it every 2 weeks, doesn't it? That's not by plan. It's just when I happen to think I've got enough to say. Anyway, so we've got an update since the 27th, 2 weeks ago, to the 11th, yesterday. And we can see here that I've underperformed, which is the first time in a little while, I think. But as you can see, I remember, I think it was last year or the year before, I was ahead most of the year, and then suddenly Life Strategy 100 overtook me right at the end. And the end is like the 7th of October, so 6th of October. So this could well happen again. I'm on a hiding to nothing with this active portfolio. But anyway, there we go. It's not looking as good as last time. And obviously, it's always looked terrible compared to 2017. So that's a disclaimer. And the dividends, we've just had about 420 in the last couple of weeks. Where have they come from? Just a few small ones by the looks of it. Oh, trig as well, probably. Yeah, that looks like about it, doesn't it? And obviously the SEIT one, SEIT, I reinvested it straight away into SEIT. So we can see here that I've added the decimal amount of shares that I bought in Trading 212 here. But I've still got it officially down as a zero yielder because I'm reinvesting all the dividends. And that was just because the thing I sold to put my money into there was also a zero yielder, so I didn't want to inflate my yield because I want to be able to put this back into a zero yielder one day without it having inflated my dividends and then having them reduce again. It's all just mind games, meaningless mind games. And then I've made a few moves. Actually, no, the first one wasn't a move, but we've had our, since I've owned JGGI, they've now announced their next dividend. So we can see the RNS here for it. The board are pleased to announce that it's going to pay 23 pence a year per share, which is 5.75%, which is, I think it's like, 0.9% higher than last year. Yeah, so to a certain extent, their policy is to pay at least 4%. So it seems like they're not too bothered about sticking to 4% because actually the net asset value of the companies was actually about 5.5, which would have meant, if they'd gone for a 4% yield, it would have meant a 5.5p per share dividend. But they've gone higher than that. I think they mention it here actually. Yeah, there we go. The company has seen a fall of 3.1% in its NAV. Despite this, the board has decided to opt for a dividend of 23p, which represents a 0.9% increase. So yeah, they've gone above 4% basically, which I suppose is okay. I guess they've got that rule of 4% so that, you know, if it gets silly, if like there's a massive chopping in half of the NAV, they don't have to keep paying 8% to keep their dividend flat. They, you know, in extreme circumstances, they can lower their dividend based on their policy. But I guess when it's a close call like this, they'd rather just keep the record of having it go higher, which I suppose is kind of what I want, given I want a smooth income. But anyway, yeah, so what I've decided to do is I've decided to actually follow their 4% thing instead of going a bit higher. So what I'm going to do is I'm going to pretend it's a 5.5p per quarter payment, and then I'm going to reinvest the excess straight away. I've written here that if there's a premium to NAV on JGGI, I might consider just putting it into that global tracker VWRP, which is the most liquid one. It's not the lowest charges, but it's the most liquid one. And since the probability is I'd be going into it and then straight out maybe only a month later or something, depending on when JGGI is not at a premium anymore. That's probably why that's the best one to go for, as a placeholder, and then I can get into JGGI whenever I want. I mean, to be honest, I am considering actually just reinvesting it anywhere I want. So I might just forget about reinvesting it in a specific place. I might just choose as if it's new money that hasn't come from JGGI, and then I don't have to use the holding in JGGI to boost the income, because obviously if I reinvest it in JGGI, that increases the income that my JGGI holdings pay me. But it doesn't have to come from JGGI really. I can just use my choice of reinvesting as my buffer. It doesn't have to be that JGGI's income is increasing with the reinvestments. I could be increasing my income by reinvesting it into, like for instance, if I got a payment today, the one I'd probably choose, I reckon, based on these discounts and stuff, is probably Gore Street Energy, because that's at a really high discount, really high yield. So if I could put the excess if I got it paid there instead of JGGI, really. So I guess I'll go moment to moment and just see how I feel when I get the JGGI dividend, because it's I don't know, it feels like a bit of a waste to buy something that I think is only at a, I think it's at, last time I checked, it was about a 2% discount to NAV. But even buying there might not be the best thing to do, you know. Having said that, I'm going to contradict myself later, you'll see. But yeah, in these circumstances, I don't know, I'd probably go into that just because it's not at a premium. But, you know, these are tiny amounts of money anyway. They're tiny amounts of money because, as I've written here, I've calculated that if I keep 5.5p of the dividend, that means that JGGI could reduce their dividend by 4.3%, and I would still be paying myself 5.5p. So I wouldn't have a decrease in my income. So obviously that's not much use at the moment, but my plan is just to kind of hope, I need to hope that I don't have a bad sequence of returns, and that by the time there is big elongated falls in the market, which would reduce the dividend from JGGI, hopefully there'll be some big rises before I have to use this buffer that at the moment is only 4.3%. So yeah, hoping that by the time big falls come, I'll have a nice bigger buffer to use up. Because if we look at JGGI's history, it's very volatile on the dividend front. It has years like this where it has a tiny increase, but then this year here, well, they haven't actually calculated the numbers here, have they? But in 2022, there's a 28% increase in the dividend. So if a repeat of a year like that happens before falls happen, I could give myself like a 4% rise and then reinvest the rest, and then that would increase my 4% buffer that I have now to about, well, you know, at least 30%, at the very least 30% of a buffer. So, you know, I could sustain pretty big drops in the NAV and hence the dividend, and still have a flat dividend that I keep to spend. So that's my plan anyway. So yeah, there's not a big enough buffer there at the moment, but at least I've started with a little bit of a buffer. So as you can see, I've put that in my spreadsheet now. So I've got myself being paid 22. I've just put a plus and a minus there, so I know what the real dividend is, and then that's the amount I'm going to keep. But yeah, it was a decrease from what Hint was paying last year, because as you can see up here, Hint paid last year 1385. And when I did these numbers, it was going to JGGI was going to be paying 1283. So yeah, another dividend cut, you know. But as you know, I've been doing a lot of that this year, so I'm hoping to rise from this low base of having cut a load of my dividends this year. Oh yeah, so we had a Fundsmith update, and one of the things Fundsmith did was he sold Brown-Forman. So it seems like when I sold it all that time ago, it seems like I made a good move, because if we look at the chart, yeah, but if we look at the last year, you see it's gone down, down and down. So yeah, it seems like I made a good move, and Fundsmith was slow to follow me. So yeah, so I can delete that now from my little spreadsheet that's tracking my, I hate it when my mouse does that. So yeah, so this little section here, Fundsmith holdings excluded, that no longer applies because he sold it as well. So we're now in alignment on that front. Yeah, it seems like I've forgotten to write it down, but one of the other things that Fundsmith did in the month was it initiated a position in Essilor-Luxottica, which is a French company. Literally the day after I bought this, the day after I bought it, is that how you spell it? Essilor-Luxottica? Yeah, so literally the day after I bought it the other day, it jumped up because Meta had purchased, like, I think it was a 3% stake in this company, because I think they use because they sell Ray-Bans apparently. I found that out after I bought it, and they sell Ray-Bans, and apparently Meta uses them for one of their products, I think. I have heard about this. I'm talking like it's completely new information to me, but I do know about this. What's it called? It's like a augmented reality kind of glasses they use. Yeah, so it kind of makes sense that they'd buy a position in there. But yeah, I don't know how good I feel about this actually, because you know it's in the name, luxury. Having just sold LVMH and L'Oreal because of this very reason, how do I feel about holding this stock? So I don't know. I'll see how I feel. I don't feel too bad because it started off as a 2% position, so it's outperformed the rest of the portfolio so far. So I could easily sell it without having done any damage. But yeah, considering what I talked about last week and selling these two, it kind of goes against that philosophy, doesn't it, of me not liking expensive things. So anyway, we'll see how I feel about that as time goes by. Yeah, and the last thing that happened, this was another one of my moves that was completely out of the blue. There was no build up to this at all. I just thought to myself, I was looking at my portfolio and I'm like, oh my God, I've got so much in the UK. And to be fair, a lot of it is because I have built up this section here more and more and more, and the vast majority of that's the UK. Apart from Pfizer and UPS, it's all UK stuff. But yeah, I'm still over 40%. So even with this move, I'm over 40% in the UK. And the other thing was, I kind of had like a 33 gram position in City of London. I kind of wanted to equalise it out a bit. But then I also had a similar situation here where my 3 international quote-unquote income holdings, there was an imbalance, you know. JGGI was a lot lower than the other two because Hint had underperformed the other two. So, I don't know, it just felt right to just rebalance a bit. So it got these 3 roughly equal. Yeah, so I've just equalised that. And what that also does is it kind of massages my income down a bit this year. So we're down to, it was over 7% the rise this year compared to the previous. Because what that does is it reduces that City of London payment there, but it increases the JGGI one, which only starts in next year. So I've reduced this year and boosted next year's income by a little bit. So, well, no, I haven't boosted next year's. I've just reduced this year's. So yeah, it just kind of smooths it out a bit. That's that. So yeah, there was a plethora of reasons really, but it was all very impromptu. Oh yeah, so I haven't gone through the where the performance came from, have I? So I'll just show it for record. Land securities and life science have done badly, so has Gulf Street Energy. Impacts environmental markets. I was considering bumping up that position, to be honest, so it was a bit more meaningful. And then, smaller companies. I noticed just now, that Aberdeen Asia Focus has sort of quietly crept up to almost being a double bagger. It's almost 100% up. But yeah, anyway, there's the results from the 27th of June. And then in Fundsmith, is the same. Any big ones? The cybersecurity ones haven't done well past couple of weeks. Texas Instruments is doing well. That's had a quite a good run recently. I've got about 3 grand in my ISA, and I keep putting off putting another 3 grand of Lowland in there. I don't know. 3 grand just seems like a bit of a small amount of money. I might wait for 4 grand before I plough more of Lowland into the iWeb ISA. It's annoying though, because in iWeb there's no interest being paid whatsoever, and I still keep thinking to myself, look, this is 40 grand, it's not a lot. Maybe I should just take that 3 grand out and lose the 3 grand, 3 grand of my ISA allowance, because 40 grand is not going to take long to get put into SIPs and ISAs. Just the LISA and the SIP itself would only take a few years to put 40 grand in. But yeah, anyway, I've been through that thought process before, haven't I? And decided that it's best just to do get it all in as quickly as possible, just in case there's changes to the tax rules. That's it, I think. I've literally taken 0 photos since last time, so yeah, there's no photos to show you. I guess that's a lie actually. I have taken 1 photo. This is me. This is me trying to lower my weight because in Asia it's 7 kilograms, and the mug in the background there is the one I always take around with me, and it's 340 grams, and this plastic one I found for about 54p in this amazing shop in South Korea is only 130 kilograms, I think. Sorry, grams. It's just not nice to drink out of though. I prefer my proper mug, so I think I might just keep the proper mug. See if I can fit it in trouser pocket when I weigh my bag at the airport. Yeah, so there we go. That's the one photo I have taken. All right, I'll see you next time then. Bye bye.